Hi everyone, a very good afternoon. You're watching Market Fatafat on ET now with me, Mubina Kapasi. This is the show where we highlight and flag off all the big movers and shakers in trade. As we speak though, what's not moving or shaking is the markets. Absolutely flat for the Nifty. We have been at the 12,120 mark for some time now and more or less directionless at this point of time. But the broader markets still are showing a more decisive move in the green with a third of a percent gain seen on the Nifty mid cap as well as the Nifty small cap index. But let's kickstart Market Fatafat then. Today we have with us from our research desk, Soumya as well as Vinny. And to talk about the technicals very soon, we will be joined by Manav Chopra of India Bulls Ventures. So hi everyone. Let's kickstart the show with the metal space, which continues to crack. The Nifty metal is yet again among the top sectoral losers. Vedanta, SAIL, JSW Steel, JSPL, all of them continue to be in the red today as well in trade. Remember that the economic impact of the coronavirus is certainly spooking markets and more particularly metals, simply because metal prices and crude prices and these two elements are closely aligned to Chinese industrial activity. So anything that essentially casts aspersions on how the economy will move is something that will hurt metal prices, and hence LME markets as well have been tanking. The Chinese commodity markets are of course shut on account of the virus as well as the Lunar New Year holidays, but yeah, it's being reflected on the LME markets, and you are seeing Indian metal stocks as well crack in trade. We'll get in a technical perspective as well on those stocks with Manav. But before we do that, let's go across to Soumya then. And Soumya, HDFC Limited, how was the third quarter for the financing company?
Well, Mubina, for this one, it was a decent set of quarter given the tough macro environment. In fact, the net interest income grew close to about 8.5% on a YOY basis. However, the profits saw a significant bump, gaining more than 4 times compared to what it was last year, and this was particularly aided by a one-time gain. The profits realized from Group stake sale were around 9,020 crore rupees, and one-third of it went for higher provisioning, and the company said that they are adopting a very conservative and prudent stance in terms of provisioning. Apart from this, the net interest margins pretty much remained stable at 3.3%. Asset quality was also steady, although the GNPAs on an absolute basis were marginally increased by over 5% on a YOY. And despite all of this, I think it was a decent set of numbers in the current macro environment.
Well, yes, not bad set, 2.5% higher. But just as we speak, we've had Maruti Suzuki that has delivered its third quarter numbers. Let's just take a look at what it's looking like at this juncture for Maruti Suzuki, and of course compare it with the ET Now poll. I think we have the profit after tax figure that's come in at 1,560 crore rupees. Okay, I think that would be on a standalone basis. So we should see the updated numbers as well coming in. And if it is that number, indeed, you are seeing the stock price tank because it's significantly below what the ET Now poll pegged the profit after tax at for the third quarter at 1,680 crore rupees. So it looks like quite a miss, on a prima facie basis. But yes, looking at the standalone numbers, let's see what are the other parameters. Okay, we have the total revenue from operations at 2,070 crore rupees. But yeah, what the poll was suggesting was, okay, sorry, this is at 20,707 crore rupees, my bad. 20,700 crore rupees is where the total revenue from operations has come in at on a standalone basis. But the ET Now poll was pegging the figure at 21,900 crore rupees. Now, it's very rare, really, to see a big substantial miss or a beat on the revenue front because you already do have the volume figure and you average, on an average, know what the pricing of various products is. But this time around, it looks like compared to what the ET Now poll was suggesting, Maruti's revenue is a bit below expectation. So maybe on the pricing front, there may have been a miss here and there. There has been a tempering, though, in the cost of raw materials consumed. Last quarter, or rather the corresponding quarter, it was at 10,802 crores, pardon me. This time around, it's at 8,410 crore rupees. So it has come down a tad bit. And yes, the profit after tax is at 1,564 crores. So it's definitely a miss compared to the ET Now poll of 1,680 crores. I have the EBITDA figure as well with me. It's at 2,102 crores rupees. So that too looks like a miss. In fact, it's almost a 10% miss. 200 crore rupees is the miss because we were expecting the EBITDA at 2,330 crores. So because of that, even the margins have compressed 10.2%. All in all, I think it's a degrowth, of course. Pardon me, it's lesser than what the ET Now poll was suggesting, that's for sure. Let's bring on board Bharat Giannani of Sher Khan. Bharat, 2,707 crore rupees is the top line, 1,565 crore rupees is the bottom line, margin at 10.2%. How are you viewing these numbers?
Yeah, so good afternoon to the viewers. So definitely the margin is below what the street was expecting, and top line also is slightly lower than what the street was expecting. So operationally, I think it's a miss on the numbers. We are working around with the EBITDA margin numbers of 11%, and the company has delivered about 10.2%. So clearly, there is a miss on the operating front.
Okay, and what do you think must have caused this? I mean, we did know that there is going to be, of course, a bit of, there may be an expansion, but unfortunately the expansion is not as much as, of course, the street was anticipating. What do you think are the possible reasons?
So one of possible reason could be the discounting continued to remain high in this quarter. So the company is transitioning from BS4 to BS6 norm. So the discounting might have impacted the margins. That is what our take is, and so that's the primary reason, I think.
Okay, all right. Yes, I think the sales promotion expense as well is something that Maruti as well has flagged off as a negative factor that hit the margins. Ashwin Patil as well of LKP Advisory joins us now on the show. Ashwin, are you as well disappointed with the margins? It's come in at 10.2%. The compared to the ET Now poll, it's definitely a bit lower. What's your view, and how do you read into these numbers?
I think, yes, the numbers have come slightly below our expectations. We knew that this quarter, where the festive activities were there, and the company had spent much more than expected on the ad and promotional expenses. Also, the discounting was quite a bit high, and as compared to that, the sales grew just by about 2%, and I mean the volumes. Obviously, these kind of numbers were not expected, but because of these additional expenses that the company has incurred, I think that has led to these not so great kind of set of numbers. So going forward, let us see how Q4 pans out with BS6 coming up in April, and the company having transformed almost about 70-75% of its portfolio into BS6. That's a smooth and gradual, seamless kind of a transformation that the company has done. So going forward, I think in FY21, the number should see some sort of uptick based on low base of FY20, as well as better than expected monsoons and expected improvement in the rural income side.
Okay, all right. Gentlemen, I'll request you to stay on with us. We also have Karanya Rao joining in now on the show. Karanya, usually, the top line growth of these auto companies is in line because we do know the volume number already, and we also know largely what exactly is the pricing of the individual models. But why do you think this time around, not only has the top line come in below expectations, but even on the margin front, it's not been a great performance?
It's probably owing to, like one of the guests on the phone line were also saying heightened ad expenditure. Do remember this was the period, the quarter wherein you saw the festive season pan out, and at the same time there were a lot of these OEMs, including Maruti being one of them, aggressively pushing out inventory, offering a lot of discounts. So perhaps it's the discounting that has taken the better of it, the input cost benefit, the operating leverage benefit. They were not able to fully realize it because the discounting was so high that it sort of, balanced it out. And perhaps that's why even on the margins front, we're witnessing a bit of a disappointment. There's definitely an expansion for sure. But yeah, the fact of the matter is that the heightened discount is something that perhaps has has played the devil this time around as far as the margins are concerned. Even for the revenue growth, it's slightly below expectations, not by about 5 or 6% sort of a miss. So despite, yes, there was a decent volume uptick, a 2% uptick that they saw at a time when the industry was going through a massive slowdown. It's good enough that they saw a volume growth, but clearly it was not enough to reflect in good revenue numbers, because perhaps the ASPs were also weak, and even the discounting is something because of which, while the inventory has been cleared out, it came at a cost of margins and top line growth and profitability overall.
Okay. All right. We also have with us Ankit Merchant of SMC Global Securities. Hi, Ankit. All in all, like my colleague Karanya as well flagged off, it's been a weak set of numbers. On the top line front as well, it's been disappointing, which is usually quite rare. What's your overall take here?
So the numbers have been pretty much in line with what I was expecting. In fact, on the top line front, the numbers have just missed by 3% as per my calculation. And the realization, if you have to look at it, quarter-to-quarter has fallen. It has fallen by around near about 4%. So I think that is one of the reasons why it has been a miss, because the street as such was factoring a quite high realization per model, which has not basically translated. Even you have to look at it from the pure gross margin perspective, the gross margins have also declined. In fact, the cost of raw materials has gone up by close to 1.5% in this particular quarter, whereas the other expenses has actually remained stable, or it has come down slightly, while the employee cost has also remained quite stable. Other income is also one of the factors where I think the street was quite bullish. We were working out, I think the street itself was working out with a number of close to 800 to 850 crores, which has come to 784 crores. That is the reason the bottom line has come down to 1580. I think that's a slight miss on the numbers. As far as I'm concerned, I think it's a pretty much a nice quarter. And going ahead, again, how will the quarter 4 pan out is the bigger worry rather than going into FY21. So we need to understand from the market perspective what are they planning, and because although Maruti has been doing well, the other players are still suffering because of the slowdown. So we need to watch it on that.
Okay, all right. Well, on that note, Ashwin, Bharat, Ankit, as well as Karanya, thanks so much for joining us with that analysis of Maruti's third quarter numbers. I think across the board, it's been a miss, especially on the operational front. We were expecting margin expansion, but certainly the street's not going to be happy, and they are not happy with the quantum of the margin expansion, which has come in at 10.2%. Stock as well has taken a knock. It's down by 1% in trade. We'll have to take a very short break right here on the show, but the untouchable private bank thesis placed in serious doubt this third quarter as leading banks began to crack on asset quality as well as growth. Hear out what Krishnan Sethuraman of Investec has to say.
Recent reforms that have taken place within the economy has sort of created some disruption within the banking sector and the real economy, which is, in my opinion, clearly favoring the larger banks, purely because of the sheer size of the balance sheet and their ability to absorb risk and absorb risk and potential stress without really destroying or getting impacted in a material way. And this advantage which the larger banks have at this juncture is allowing them to actually gain market share at a faster pace despite a broader, weaker credit growth at a system level. This is particularly visible in someone like an HDFC Bank, which on its base has grown nearly 20% YOY. And a lot of that pace, that growth has come from market share gains.
The government does need to focus on increasing domestic consumption. And from a tax perspective, what in my view would help actually is for the government to increase the span of transactions that are under GST or the items that are leviable to GST today, and to make the exemptions minimal. But along with this, what it also has to do is to rationalize the tax rates. This will help in moving a lot of transactions which today are happening in the informal economy to the formal economy, and also augment the government treasury.
Welcome back. You're watching Market Fatafat on ET. Now let's continue with our countdown of movers and shakers. And just at the beginning of the show, we were talking about how the metal stocks continue to decline. So now let's get in a technical perspective on one of them, and that's Vedanta. Manav, most of them seem to be now erasing that rally we saw in the beginning of 2020. What's your view on Vedanta?
See, the prices have definitely breached the important support levels and are currently trading below its long-term averages. We have also seen a decisive close below the weekly support. So for the short term, the trend is definitely bearish, and we have seen good amount of open interest added, which confirms the short built up. So on the near-term perspective, looking at the global volatility, Vedanta would definitely witness further declines, at least for the near term. We have a lower targets of 135 on the lower side, and one maintain a sell on rise approach for the near-term perspective.
Okay, very quickly moving on then. Vinny, JK Paper, how was the third quarter for this company?
Mubina, this quarter was, quite a mixed set of number for the company, and thus we're seeing the stock is also falling today. Now, if we go to see it, the revenues are down by around 5.6% on a YOY basis. Though we are seeing an improvement in the profits of the company, as well as the margins have also improved. Mainly this is because the input cost of the companies have reduced. Also, they have seen continued improvement in the operating efficiencies, which is very good for the company. So, this quarter may be slightly weak for the company, but they are expecting to do better in the next couple of quarters as well, Mubina. So let's see, today just a subdued, and decline in the stock, but overall we can expect better numbers in Q4.
Okay, all right. JK Paper down by about 3% as we speak. Manav, let's also get in a view on a stock that has been weak for some time from the PSU space, Power Grid. Today also it's down by 0.6%, but we are seeing the stock inch up just in the last couple of minutes. What's your view?
See, even though the prices are bouncing from the intraday support, but the overall trend has been quite choppy for Power Grid since many months now. We have also seen last week the kind of a decline that the prices witnessed from its peak of 210. It has actually breached the important daily support levels. As long as the prices trade below the levels of 195, 198, which is a very strong ceiling on the upside, we expect the selling pressure to continue, and likely that the prices would test the lower end of the support levels. So on the immediate basis, we expect the short-term decline to extend and see some more declines on the lower side. We expect lower targets of 175, and overall one should maintain a sell on rise approach into this for the short term.
Okay, 175 is Manav's target on a Power Grid. Currently it's at 191. So Amya, very quickly, Torrent Pharma, how was Q3 for this pharma company?
Well, it was a weak set of numbers for Torrent Pharma. The revenues particularly were down by over 4% on a YOY basis, while the profits just saw a growth of around 2% compared to what it was last year. Even the margins remained, however, steady at around 27.5%. In fact, Credit Suisse, despite the fact that they did witness weak Q2 numbers and maintaining their outperform stance in the stock with the target price of 1,700 rupees per share, well, they believe that going forward in the coming quarters, the growth might get better from here on. And in fact, that's what's keeping them optimistic. However, the stock today is reacting on the weak set of numbers reported by the company.
Okay, Torrent Pharma is down by 5.3%. Manav, let's talk about Indoco Remedies. This stock had seen quite a lot of traction, especially post the third quarter numbers. But today, another day of this one coming off. What's your view?
Yes, in fact, the prices have seen a very good rally from its important support levels, and there was a good decisive breakout from its medium-term consolidation pattern. I sense in the near term the prices are just consolidating its gains, and it's forming a short-term strong base at the levels of 210. So any dips near the support level should ideally be a good opportunity to enter long position. The overall trend is bullish, and we expect upside target of 250 to be achieved.
All right, 1.3% gone for Indoco Remedies, but unfortunately that's all the time we have on this edition of Market Fatafat. Manav, Vinny and Samya, thank you for joining in. Stay tuned though, closing trades is coming up after this very short break.